Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a returning guest. He is David Morgan. He's over at the Morgan Report, also known as the Silver Guru. Thanks for coming on again, David.
Oh, my pleasure. Thank you.
You had sent me an email, I think a few days ago, and you told me that you agreed with my stagflation article, and I'm going to be posting this below the interview. But anyways, getting back into stagflation, my thought process was that the rest of the world is depressed right now. This is different from the 1970s to a certain degree, even though the Fed is printing like mad. Everyone's printing like mad. The United States has the world's reserve currency, so they basically can kick the can down the road, even though I don't agree with it and you don't agree with it. So what makes you think that there won't be a dollar crisis, just guys like Peter Schiff, guys that I follow, and many others? Ron Paul talks about a dollar crisis. What makes you think a little different and maybe like me?
Well, I don't want to take sides, but I do think there's a dollar crisis. I want to stay consistent. What I do see is in your article, and maybe I didn't read it well, was that people have the idea that the quantitative easing is a guarantee of a hyperinflation, and I say no. That the problem or the difference between the 70s and now is that in the 70s there was COLA, cost of living adjustments, and the velocity of money was much higher. Everyone was looking at the M1 figure. If the M1 figure was up, then the money velocity was accelerated as a result and started going primarily into inflation hedges and particularly gold and silver. And that was at the end of the cycle. This time we're having massive printing, but it's not getting in the hands of the population. There's no such thing as a cost of living adjustment. In fact, a lot of jobs are getting pay cuts. It's like, you want to keep your job, we're going to deduct it. It's going to be 10% less than you're getting last year, that type of thing. So that's one thing. The other thing is these banks are liquefied to a great extent, but they're not, again, passing the money on to the people. So it's the velocity of money that's most critical, and that's the big difference between the 70s. Stagflation, from the definition that I use, is that you can have inflation in some areas and deflation in the others. Now, being an Austrian, I want to be consistent before I get too many people throwing rocks at me. The strict definition of a deflation is a contraction in the money supply, and there is not a contraction in the money supply. Credit is there, but the credit, again, is going to these big banking entities that aren't passing it on. Try getting a small business loan. Try getting a second mortgage on a house now. They're giving them away for anybody that could breathe a few years back, and now you absolutely have to show you don't need the money before you can borrow it, and even in some of those cases you're not going to get it. So things have tightened up considerably in the credit markets, whether anyone admits it or not. So we have this case that most Austrians, me being one, say can happen, and that is inflation on one side of the ledger and deflation or the results perhaps of deflation on other sides. Obviously there's not a contraction in money supply, but the velocity of money is so low, the turnover rate is so low, that all that quantitative 2, 3, and 4 is just sitting there. So since it's sitting there doing nothing, it acts as if it does not exist. Does that make sense?
Yeah, it does. And for that money to go out into the private sector or into the broader economy, it just seems that we'll probably need to have some sort of supply-side president come in 2016 for that to happen, because right now it seems that many businesses are scared of what the government is doing. So if you get a guy that cuts taxes, which they probably will do if a Republican wins, the velocity of money is going to pick up. And since that velocity of money is going to pick up, then we could see some of the effects of the nasty inflation.
I would say that's correct. That's one scenario. I would, propose another one, and that is that for China, one of our big trading partners, take one like China or take Japan or take any large trading partner that's sitting on a lot of U.S. debt. There could be something that happens, day after tomorrow. In other words, in a very short time frame. And I'm not forecasting this, but I'm just doing it to give another possibility. And that is that they say, we've got enough debt. We're going to sell some of this, some of these 30-year bonds or 10-year Treasury notes. and we're going to cycle that money, and we're going to buy, more copper. Copper doesn't waste. It doesn't rot. We can store it. We've got plenty of room for it. So we're going to sell some bonds and buy copper. If they started to sell, this is hypothetical, but they started selling enough too fast, all these traders watch each other. It's all electronic. They all look at what's going on. They all look at volume. They all have algorithms, meaning, math programs, software that says, oh, my goodness, the Chinese are selling a lot of bonds. The bond market is starting to sell off. I'm going to sell off too. And all of a sudden it becomes like a feeding frenzy, and everyone starts to sell the U.S. bond. So I look at it as a possibility of lots could happen even in a very low velocity state. It doesn't have to necessarily be, U.S. focused or U.S. centric. It could be some anomalous event outside of the U.S.'s control that takes place that all of a sudden the dollar starts to really tank rapidly. Another thing I'd like to say is that I feel strongly that there are so many unknowns out there, and that it's a global problem with the U.S. being the reserve currency, that there's probably scenarios out there that no one has thought of yet that are possibilities. I mean, cyber warfare is something that, if you do a Google search on that, you see how much of that's actually going on. I have a merchant account, as anyone would know, having a business, and the amount of fraud that's in the credit card arena is unbelievable. I mean, those were the exact words from my banker. So, there's a lot going on. I don't want to scare anybody, but I do want to point out that a lot of people are confused. And stagflation, I think your article kind of brings up better thinking, meaning that, yes, my insurance bill's going up, my college tuition for my kids is going up, my food bill's going up. All that looks like the result of inflation. And yet, housing prices are going down. I can't, my tax bill for my house is down. So that's deflation. So, where are we? And, in a sense, from a practical common sense approach, hey, we are having both, Now, again, trying to not get anybody too upset with me being in an Austrian school, no, strictly the money supply has not contracted. But the effects are counterintuitive of what's going on, and that shows confusion in the market, and that's where we are. The markets are very confused, and that's why you see these rapid flows of money from time to time, and then these very, very quiet periods where the velocity of any index you want to look at, the velocity index in a particular sector could be very low, even though things are very uncertain. It's like, well, as you said earlier, people are just waiting to see what to do. As you mentioned, these corporations, they want to wait and see what the future holds. What's the tax rate? What's the, what are the rules going to be? Until I know what's going to happen, I'm just going to sit on my cash. I'm not going to deploy it. I don't know what's going to happen.
Moving forward, I wanted to get into silver, which you are known for, and it just seems that there are a lot of frustrated investors right now. They thought that silver would be over $50 an ounce. We've seen silver go from $50 an ounce all the way to the lows of $24 an ounce, and then now it's trading at $29 an ounce. So where do you see silver trading within the next few years? Do you see a consolidation period continuing from 2011, and then we could eventually see that spike?
Well, first of all, a couple things. One, it did get to $48 and change in April of 2011, and it has been in about almost a 2-year consolidation ever since. The spike lows have been actually 26 and change, not 24. Just, because I do these updates with charts and stuff, so if I let that one pass, someone will email me. But you got the general idea very correct. We've been in a long consolidation. I do not see the consolidation going much longer. Now, again, when I make a forecast, it's experience in the market. That counts for a great deal, but not everything. No one knows the future exactly. It's probability. I looked at what's happened in those kind of accelerated moves, a mini parabola, if you will, parabolic move, which we had in silver. It got ahead of itself, and I was saying so. And at the time, I was taking a lot of criticism. There were a lot of new silver bulls and some of the older heads, too. Some of the gray hairs like me were saying, David, don't call the top here. You're going to make a big mistake. You're ruining your reputation. Everyone will hate you. You're going to be, you're going to go down in history as a fool, and on and on and on. Well, I called the top 48. I called it about 3 days before, and I said, this, all my indicators say this is it. I could be wrong, but I think this is the top. And I had a guy from Europe fly over to meet me and present me with a gift because he was over-leveraged in the futures market based on my call. He got out, made a small fortune at the time. I don't know if he's lost it back. A lot of traders do. But nonetheless, he was quite pleased with my call. That doesn't mean, I get it right every time. I'm not trying to imply that. What I'm trying to imply is, one, I do my own work, and two, even silver can get overvalued for it. Well, let me restate that. It wasn't really overvalued, but it had gone too far too fast. It was undervalued really at 48, but it got in there too quickly. So coming back to your question, I think we're probably at the bottom here. I think we're going to start coming out of it. For this year, I see a transition year. I see this as a year where people that are giving up on the metals that maybe will sell at the bottom here, there will be new buyers to pick up those bargains, and there will be additional buyers later on in the year that will take the price higher. I think we can see, 35 to 40 again. I think the average price is 35. I just read it in the Bull and Bear. I forgot the average price was 33 or something like that. I'm looking for a little better than that. And I also said, if we really get going, and no one knows, again, going back to the bond illustration I made, or some other anomaly, some crisis in the Eurozone or something with Japan printing too much money and the Japanese start to go into a currency crisis or whatever. There's so many black swans out there. No one can really forecast them all. That something takes place and all of a sudden the metals take off. Now, I do not think that that is going to take place in 2013. However, I have to be open-minded in the state that it could happen. If that were to take place, then you might get silver accelerating again, maybe as high as the $48 level. I do believe that to get past that $48 level, it's going to take a lot of work and a lot more time than just 2013. I think it's probably going to take a few years to get, like 2013 and 2014. We have got such a line in the sand at that $50 level that it hit during the Hunt Brothers situation back in 1980, that I believe it's a psychological barrier that will be defended at all costs. But I don't think it'll hold. Once you see silver above the $50 level and it maintains that for, let's say, several days to a few weeks, then I think even the most biased station in the financial world will probably make note of it. Silver is making a new all-time high. Well, really, in real terms, it's not a new all-time high, but in nominal terms it would be. So silver's making a new all-time high. It's at $60. What will happen then is what's typical of markets and people that never thought of silver. Oh, I didn't know silver. I thought silver was still $5. Oh, it's $60. Oh, my, I better buy a little silver. And so you have all these new buyers, these Johnny-come-latelys that will pour into the market. And that, of course, it's a small market. It will take the market even higher than that. So when that happens, I think it will be the beginning of kind of the last leg up in the silver market. And depending on what's going on in the currency markets, we'll just kind of have to play it by ear. I do think silver can be overvalued at a certain point in time. It's still undervalued. It's not even fair valued at the current time. It still represents opportunity, but it also may take some more patience because, is this the bottom of the market here on an intermediate term basis or not? I don't know. I think it is.
Does this market remind you of the 1970s? If you look at gold, I know you're a silver guy, but I remember looking at the gold prices in the 1970s. It went from $40 an ounce once the Bretton Woods system broke down. Then it went to $199, and there was a 43% correction in the price of gold from $199 to around $110 an ounce. I'm not saying there's going to be a 43% correction in gold. We've already seen close to 50% correction in silver. So does that remind you of something like that? Because we're seeing the stock market boom, even the dollar's going up, which is a joke, but...
Very much so. And, just for the record, not many people know this, but I was really a gold bug during the first bull run. It wasn't until the very end of the market that I started to study the silver market and been doing so ever since. But I wanted to know, well, why would the Hunts buy silver and not gold? I mean, they're wealthy enough to buy gold. Why would they do that? And so I really started to question, what's this, what's so great about silver? And I caught on to that study probably like late 70s, like 77, 78, 79, and 80 is when I was really looking at silver. But I didn't put much into silver. I had a little bit. I had more of a gold bet going on. So I'm really familiar with that. And, yes, it does remind me of that. I remember all kinds of things going on in the mainstream press, not not often. In other words, not just bad mouthing gold the whole time, but as it was going down, they would mention it. And when it got into the 100+ range, 110 or so, as you said, a lot of gold bills had given up, and, it just really seemed like, maybe gold, I should have sold at 200. I mean, that's what you heard over and over and over again is, oh, I wish I would have sold at 200. I wish I would have sold at, 150. God, I could have sold at 160. And hear all these people lamenting the fact that they had bought it at 35, 40, 50, or even 100, and doubled their money, and now they're back to the same place. And so it's that kind of sentiment. I'm seeing the same type of sentiment now. I was in the mining shares as well. I don't recall that the mining shares had the discounts to the bullion value that they have now. I'm sure they were discounted, but not to the level I don't think that they are now. Regardless, it has a very similar feel to it.
Yep, it sure does. And before I let you go, David, how can people follow your work and do business with you?
Well, to follow the work, I think the easiest thing for most people now is to get on our YouTube channel, and that's just called Silver Guru. And by the way, I use the Silver Guru moniker as basically a joke. I mean, no one's really a guru in anything. I certainly study the silver market and the gold very hard, but I say it with in a joyful way. I mean, I really don't think it means much. It's just a moniker. Having said that, YouTube, Silver Guru, Twitter is Silver Guru 22. The website is themorganreport.com, also known as silver-investor.com. Either one will get you. And you can get a free e-letter every weekend. And then there are paid member services, which is a protected website login feature that's for people that really want to get involved in the metals. And we do commentary on money, mining, and the metals. And we talk not just about silver, although that's one of our primary focuses. We look at the resource sector across the board and look for value in those sectors in the top tier, mid-tier, and speculative categories.
All right. Thanks for coming on again, David.
Thank you for having me.